In the previous video, we have identified the effect increase on or decrease on asset, liability, on equity, revenue and expenses. For today's video, I will continue with the journal entry or double entry for each transaction. So the principle of the journal entry or double entry, whenever the effect is increased, are as follow. For asset, debit side. Increase in asset, debit side. Increase in expense, debit. Increase in equity, credit. Increase in revenue, credit. Increase in liability, credit. Therefore, for asset and expense, when they are increasing, they will be put on the debit side. And look on the another side, equity, revenue and liability. If they are increasing, we make an entry for them on the credit side of the journal. Okay, now let's look at the journal entry or double entry if the effect is decrease. Asset decrease, credit. Expense decrease, also credit. Both asset and expense, when they are decreasing, we make entry for them on the credit side. But for equity, if equity decrease, debit. Revenue decrease, debit. Liability decrease, also debit. Therefore, for equity, revenue, liability, when they are decreasing, we make a journal entry for them on the debit side. Now, let's look at the example based on the past year examination question, December 2019, question 2. The first example is on 1st November. So, from this example, the effects are asset increase and equity increase. Asset increase, the journal will be debit side. So, the asset is cash. Cash, debit. Okay, cash is asset, asset increase, debit. Equity increase, therefore credit. So we can just write on the credit column the word capital. Capital equal to owner equity. Number 3, asset increase. So the asset increase is printer, therefore debit printer. And at the same time, asset decrease. So which asset is decreasing? So the asset is bank. Therefore, decrease in bank put in the credit side. So debit printer, credit bank. Okay, 13. Asset increase. Asset account receivable, ratio increase, put on the debit side. Revenue increase, put in the credit side. So revenue, the amount of sale increase. Therefore, we just write sales. Or you can just write sales revenue also can. So revenue increase, credit. 14. Asset bank increase. So debit bank. And asset cash decrease. So credit cash. 17. Expenses, which is a rent, increase, debit rent. Asset decrease, asset cash decrease, therefore credit cash. 21 or 21st November, equity decrease, drawing. Yeah, we have drawing of goods, drawing of check. Therefore, in equity, because it is decreased, put on the debit side, drawing. And then for asset decrease, which is bank. Okay, the amount of bank decrease. So decrease in asset, bank, credit. Decrease in expenses, goods. Okay, because Azrin withdraw goods. Therefore, the amount of purchase expenses will be decreased. So decrease in expenses, credit. So we put credit purchase. Okay, this purchases or purchase expenses also can. 24. Decrease in revenue, debit. Okay, sales return or return inward. And then decrease in asset, which is account receivable, credit. So credit account receivable, Rachel. Okay, in the journal entry here, you need to be specific. Okay, what type of asset? Okay, for example here, number 1. Asset increase. In the journal, we do not write asset, debit asset. We write down the specific account, which is cash. Right? Similar to this one. Okay, number 3. The effect are increase asset, right? Decrease also asset. But for the journal entry, we have to write down the specific account for each asset. For the first effect, increase in asset is printer. For the second effect, asset is the bank. Okay? Similar to 13. So the effect are asset increase. So in the journal entry, debit side, we put the specific name of the asset, which is account receivable Rachel. And for revenue, okay, revenue, the specific name for the revenue are, the specific name for that revenue is sale. Okay, because sold good. Therefore, the account, the specific account to be used is sales. Okay, 14. Increase in asset, decrease in asset. But which asset? Okay, so in the journal entry, you need to be specific. So for the first one, asset increase is the bank. For the second effect, asset decrease is the cash account. Alright. Okay, 17. Expenses. Okay, expenses increase. So which type of expense? So therefore, in journal entry, you have to be specific. Put the name of the expense. So here for this example, it is rent expense. Rent expenses. Therefore, we put rent. Rent expenses also can. Rental of premises also can. Okay. And then decrease in asset. Which asset? So write down the specific name of account for that asset, which is cash, in the credit side. For 21st November, equity. So decrease in equity, which the specific account for the equity which is decreasing is drawing. Okay, therefore debit. And then we have asset decrease. Which asset decrease? The bank account. And then another one, expenses. Which expenses decrease? So the name is purchases or purchase expenses. 24. Revenue decrease. So which revenue? Okay. So in the question, it is written as sales return, right? So sales return is also known as return inward. Therefore, use the specific name. So return inward account debit. Asset decrease. 24. Asset decrease. Which asset decrease? So we have to put the specific name, which is account receivable ratio. So this asset decrease put on the credit side. So that's all for now.